Good afternoon, students. Very good afternoon to all of you. I welcome you all to this session on completion and review. And today's our session faculty is CA सुमित डेडा जी. उन्होंने लास्ट सेशन भी आपके साथ लिया था. तो वेलकम सर, वेलकम टू द सेशन सुमित सर. स्टूडेंट्स, टाइम एंड अगेन मैं आपको रिक्वेस्ट करता रहा हूं, आपको एडवाइस करता रहा हूं कि आप ऑडिट इनसाइट्स के सेशन, चाहे आप इंटरमीडिएट में हैं या फाइनल ईयर स्टूडेंट हैं, आप जरूर देखें. बिकॉज जो आप स्टडी पढ़ रहे हैं, जो आप मॉड्यूल में पढ़ रहे हैं, चाहे इंटरमीडिएट में या फाइनल में, उसमें आपको पढ़ने में बहुत मदद मिलेगी. बहुत आपको इससे कंसेप्चुअल क्लैरिटी आपकी बढ़ेगी, आपकी अंडरस्टैंडिंग बढ़ेगी, आपकी एग्जाम के अंदर परफॉर्मेंस अच्छी आएगी. तो स्टूडेंट्स, और मैं आपको ये भी रिक्वेस्ट करता रहा हूं कि आप जितने भी आपके, मुझे मालूम है आप सबके अपने कॉलेजेस में जहां भी आप और बीकॉम या एमकॉम कोर्सेज भी कर रहे हो, साथ साथ वहां पे जो आपके ग्रुप्स बने हुए हैं सीए स्टूडेंट्स के साथ, वहां पे भी आप शेयर किया करो इंफॉर्मेशन, ताकि मैक्सिमम स्टूडेंट्स इसका बेनिफिट उठा पाए. और इसके लिए स्टूडेंट्स, आप सबको मालूम है कि बहुत एक्सपर्ट इंडस्ट्री के जो वो सेशंस ले रहे हैं यहाँ पे ऑडिट इनसाइट्स के. और अभी हमारे नेक्स्ट जो सेशन होगा वो 15 जुलाई को होगा ऑडिट रिपोर्ट पर, और 22 जुलाई को. 2 सेशंस होंगे ऑडिट रिपोर्ट के, और 25 जुलाई को होगा ऑडिट डॉक्यूमेंटेशन. तो नेक्स्ट सेशन स्टूडेंट्स वेडनेसडे 15 जुलाई को ऑडिट रिपोर्ट का होगा. तो आप, जैसा कि मैंने भी रिक्वेस्ट किया है आप सबको, कि आप सबको जितने भी आपके फ्रेंड्स हैं उनको जरूर इंटीमेट करें, ताकि वो भी इन सेशंस का बेनिफिट उठा पाए. विद दीज वर्ड्स, ओवर टू सुमित जी.
Thank you, sir, and good afternoon, dear students and would-be chartered accountants. Now, today we'll understand where we left last session, and then can you allow me screen sharing? Vivek, allow me screen sharing.
Vivek, tech support Vivek.
Okay, yeah, got it. Thank you. So we'll discuss from where we left now. So I'm sure you are now studying for inter, you getting theory practically, you're reading theories, and to align theory into practical also. But whatever we are reading for, are we reading only for exam? Certainly no. Yes, you are reading for exam, but post your exam, this will be, you need to follow them practically. And once you become CA, it will be mandatory for you to follow. Now the time has changed. Now the regulators are reviewing the files with a lens. And you need to ensure that whatever is written in standards is done in letter and spirit. These are very crucial standards because if you have done everything and have not documented properly, then it will have an issue. If you did all samples checking but did not take care of subsequent events, did not take care of going concern, did not inform to the committee of those charged with governance, if you have not communicated with them, if you have not identified misstatements, then it becomes a huge issue. Now, I'll take you certain basics and then we'll discuss line by line certain points. So, once I complete the audit, there has to be judgment comes in. Judgment comes in whether the subsequent event need to be booked, to be adjusted, non-adjusted. I need to figure out the evidences for going concerns, whether the entity is going to continue for next 1 year minimum or not. These are very basic things that understanding need to be developed upon. Very, very basic points. And then comes the communication. I have done all audit. Now, whom should I inform? Shall I inform only to the management, whom with I'm talking day in, day out, whom I'm working with, like CFO, CEO? Is that only thing I need to inform? Or I need to inform only shareholders? So shareholders are the one who review your reports. Or I need to also involve in between. We call a term called those charged with governance. Between shareholder and the management, there comes a board of directors. So there must be independent board who is taking care of the entire company. So we need to understand how you communicate, whether, does it make sense the way you communicate, and many orders of the regulator have came where they pointed out that communication was not proper, or it is not evident that communication eventually happens. And most important point we need to keep in mind in audit also, dealing with client also, and in personal life also, how you communicate matters a lot. Even though you are communicating the right thing, but if told in a wrong tone, make a big issue. And I'll give a real example. So I was with one of the big fours in audit. So I was an audit manager, and there was an audit checklist. While we are doing the completion and review, there was one audit checklist, and in the checklist there was one point where we need to understand from the management where those charged with governance think the fraud could happen. Where the areas that the fraud could happen. So one of my colleague went to the CEO and went to the board of directors and asked a question, which is a requirement as per fraud. This requirement as per fraud evidence is required. He asked a question, sir, who all are the persons in your organization who can do a fraud? And hearing this question, the CEO and the board got very upset. And the reason they got upset, they said, how can you ask me to name my colleagues whom I think I can do a fraud? And he immediately made my call to our partner and say that call these guys back. They are trying to create distress in my organization. They're asking illogical questions and a question which is going to damage somebody's career, somebody's image. Then partner got immediately panicked because if a client is giving a view that you go away, then we need to. Then they call the partner, and the partner called and asked what's the issue. So in the checklist it was there which areas are prone to fraud. Now, the question of the checklist was you tell us which areas you are susceptible to fraud, not which person can do the fraud. So the question was same, intent was same, but the way it was presented made a huge issue. So whenever we communicate to those charged with governance, we need to be very, very sure how we are communicating because you're communicating to the top board. And if we give anything incorrect or unpleasing words, can have a big issue in your audit. So we last time we talked about subsequent events. We talked about going concern, these two broad things. We'll again touch those back and then discuss on misstatements and other points. We discuss on all these essays which we discussed. Now, this is just a glimpse of NAFRA order, just to make you understand how it is so serious that now audit documentation is not a part-time job. Now, audit documentation is to be the most important part. It is pervasive in all your audit efforts. You do very good audit, 100 by 100 marks, but if you don't document it, your marks zero. Any idea what do you mean by in a layman terms, what is expected as a documentation in a layman terms? In a layman terms, when we say layman terms, how should somebody make a documentation? So, what is the expectation from a documentation is when a man of common knowledge, when a man of common knowledge reviews your file, when a man of common knowledge reviews your file, can he reach to the same conclusion? Can he Can he reach to the same conclusion? Just a second. Just give me a minute. So what is expected is you should keep a documentation in such a way that a man of common prudence, common knowledge takes your file and can get to the same conclusion, same evidence. Now, if you see, this is a regulator order on the audit firm saying that you have duplicate work papers, and this is the biggest problem. You, irony in the work paper is you keep version 1, version 2, version 3, many versions you put. So ensure that do it once, do it right. Do not do not keep multiple work papers. Unexplained manual calculations. If you write something in work paper which has not evidenced by any calculation, any justification, ignored. So your working papers are not a rough work area. Your working papers are legal audit documents which can be used against any issue. So that you need to keep in mind. Now, a work paper has been altered. Now that is the biggest thing you need to all take keep in mind. So what is the Japanese philosophy? Do it once, do it right. I can easily say many of us have the habit of we will do it later. बाद में कर लेंगे. Do we agree? That अभी तो just close करो बाद में देख लेंगे बाद में कर लेंगे. In audit work paper, this philosophy will not work out now because now majority of the working papers are in digital form. So if I do anything later, the document can easily tell when it was created, what was the day evidence was tampered. So we need to be very careful when we are doing something. It is very, very important. And whatever documentation you take, it has to have a rational record. If you don't have, so when I'm doing auditing cash, bank, or going concern, any work paper, subsequent events, I need to write in a conclusion note that yes, the conclusion happened. The I find no material misstatement, easy, good to go. Something you need to write a proper documentation that there is no error note. If you don't write these kind of errors, became a huge issue. So that you need to put it. So that was one of the issues where they observed a lot of issues in quality. Second, as I mentioned, again, this is another NAFRA order where they said you have not maintained documentation because documentation should reflect how much nature, time, extent of audit procedure performed. Engagement partners, whatever discussion happened with EQCR, engagement quality control review partner, whatever reports you have reviewed, it should be mentioned there. If you remember last year, the last session, when we had a last session earlier, and I spoke on, I spent 2 months on an audit, and when I came to office in half an hour, my partner said, "Following are incorrect things in your file." Right? I said something like that. And how come my partner could find out in half an hour without even going there when I went actually there? He find out by doing variance analysis. Now, this variance analysis, analytical procedure need to be formed. The moment you start following analytical procedures, you will be able to figure it out how to how to get a analysis of audit. Then you can do the right assessment. So if you have not done that, ensure that whenever you become auditors, when you start taking charge, you at least understand how to do analytical procedures. So this way your documentation will be ensured. Now this is very, very important, which we are going to discuss today. Those charged with governance. What do we mean by those charged with governance? Now, as I mentioned, there is one body called shareholders. Shareholders run the company. Shareholders, the one who put money in the company. They are the first person who put money in the company. from the shareholders, then we got board of directors. We appoint board of directors to take control of the company, and from the board of directors appoint CEO, CFO, and various other professionals. Since we don't deal with board directors day in day out, we don't deal with them. We majority always deal with audit committees. We deal with audit team, that is CFO, CEO, who gives you data. If you find any issues, whenever you are finding any issues in audit, whenever you are finding any issues in audit, your first reaction would be you would always go and meet those CEOs, CFOs and discuss these issues because they take care of the entire accounting and entire control. But what we need to keep in mind, all collective errors, control deficiencies need to be communicated with those charged with governance. If you have not done that, if you have not done that, then it will be a serious non-compliance. So ensure that those charged with governance are informed what is your responsibility, what did your scope of work, what deficiency you observed. If I just do verbally, let's say I go to the audit committee meeting and verbally discuss, though I've actually done it, but will I be able to prove in any inquiry later on if the regulator comes and review? I am sure you all will agree I will not be able to prove it. Even though the audit committee would have listened it, but because it is not documented sent, if I have not sent any presentation, any email, it will be very difficult to justify that I've actually communicated that. So ensure, and here it is in the NAFRA, National Financial Regulatory Authority, passed an order on one of the firms saying that you have not documented the communication you did with them. So I'm not sure whether you have done transparently audit and effectiveness the process. So that you need to keep in mind. Now, understand what these standards talks about. And remember very important point, one important point. So when you will work, you will have two things generally. When you will work, there are two things generally. One is accounting standards and second is auditing standards. Accounting standard responsibilities of the client also to follow, or it is not a responsibility. And I'm sure you will agree, it is the client responsibility to follow accounting standards. Then it becomes the auditor responsibility to ensure that they are applied correctly, right? So if inventory AS2 says cost or NRV, whichever is lower, it is the client who need to determine cost and need to determine NRV, and he need to assess whichever is lower. That we all understand. It is the auditor's job to ensure whether the accountant has actually done that or not, whether the client has actually followed this or not, that auditor will check out. So that's one thing. Coming to the second part, we have auditing standards. Is client responsible for auditing standards or it is totally responsibility of the auditor? Here it is totally responsibility of the auditor. Even if the even if the client do not willing to follow this, it is the auditor's responsibility to ensure it gets followed time and again. So what are these standards talks about in a layman terms which we discussed? When we talk 560, which is subsequent events, it talks about, what does it says? Does events after the balance sheet date change what the statement should say? So I audited 31st March 2026. From 31st March 2026, whatever I have done audit, as on 13th July, from that day, 31st March reporting date to signing date today, does it changes the situation Does it change the story which I want to tell? So that you need to relook. 5 talks about look into the going concern issue. Can I still appropriate to issue a statement on going concern? Imagine what is going concern in a very simple terms. If I go to a doctor and I get my checkup done, and the doctor says you are absolutely fit. So what does that mean? I'm actually good, and at least I will survive a little bit, like longer. But let's say today I went to doctor, and God forbid something happens tomorrow. Will I thank the doctor? Or I would have said, what have you done? On the basis of your advice, I thought I am fit, so I went to play pickleball, and now I'm not breathing able. It's not good. Similarly, that is what expected from the auditor. When auditor puts a stamp on any company as a going concern, the end users, the stakeholders, the lenders, they will think that okay, company is audited by auditor and he has not given any concern on going concern. He has not given any qualification on that. So it means that company is going to continue at least for a year. That's a bare assumption. So we need to check whether we can still continue to this. And this going concern and subsequent events go hand in hand. Then comes evaluation of misstatements. This is very important. And so our job is to review the audit file, audit the client's workings, and find out errors if any. And for sure there will be errors. And having error is no crime. Because if somebody is working 18 hours a day, the accountant is overloaded, he has no staff, his division is small, and the management does not want to hire extra staff because of pay issues and all. So if it is too much burden, he might make out some errors. Errors are okay. Fraud is different, error is different. Now, if I would have done some errors in the report, in the working, you will discuss with the client whether he want to rectify them or they are so insignificant, then it does not impact my financial statement. So it is our choice. But to decide whether I should correct them or not, I need to first evaluate them. This will give me idea. This will give me an idea. This evaluation of misstatement will give me an idea. Are the mistakes identified are too significant for my statement as a whole or too immaterial? If there are too significant, if there are too significant, then it needs to be impacted. Written representations. Now we are auditing on behalf of a company, and certain things only company can tell us. So let's say if during the year a fraud has occurred and only because I come to audit at the year end, something happens during the year, only the company can tell. So I need to ask from the company whether any fraud has occurred or not. And the company should say, yes, during the year a fraud occurred or do not occur. If they say no fraud occurred, so they'll give a representation. Once they confirm that during the year no fraud occurred, which according to their knowledge, then it safeguards me, saying that, okay, I have no reporting responsibility because no fraud has been occurred. So I need to take confirmation from them. And then comes communication with those charged with governance. What must the auditor tell governance and when? Shall I do only at the year end, only after my audit is done? Or I can do during the or I can do during the audit period. I feel it is too urgent. So it depends on situation. You can communicate either start of the year, start of the audit, end of the audit, mid of the audit, wherever you think it is much relevant. It is up to you. Bare minimum needs to be done at the end of the audit. That's the bare minimum. You can meet multiple times. It is your choice. Now, when you are going to meet, what are you going to tell to them? And we need to tell, is there any control weakness that is important enough to report and whom? That needs to be told to them because they are the one who will be getting impacted most because they are governing it. And the shareholder will ask question to them. The regulator will ask questions to them because they ask the board. Remember, regulator will never come and ask shareholder why it happened like this because shareholder is a sleeping partner. He just put money and sit on the edges. It is the board of directors, it is the CEO, CFO, they are actually on the ground. So they need to ensure if there is any control deficiencies, you need to inform to the mandatory, you need to inform to the those charged with governance, so that way they can take care of it. And also, and also, certain things get rectified only due to fear. If I am a CFO and my CEO is a good friend of mine, and you point out a mistake to me, and you say, if you don't rectify, I'll tell to CEO. And if CEO is my friend, I'll say, okay, go and tell him. Because I'll not be scared because he's my friend. But the moment you say, no, no, I'm going to tell to the entire board of directors, then I'll be very, very scared because my job can be an issue because you're talking to the board of directors. So that's why at times it puts a pressure that, okay, if something is wrong, rectify, else it will be informed to the board of directors. Then people will try to solve it as soon as possible. Now, we discussed last time 560 subsequent events. I'll discuss one small point because I think we had confusion last time because I asked certain questions and we got two contradictory answers. So remember, financial statement freeze a moment in time, and that means 31st March 26 time freezes. But the audit does not end here. 560 asks what happened from that moment, that is 31st March, till the day report is signed, and also after the report is signed, what should happen. Till the date report is signed is very easy to understand. After is little bit practically challenging. We discussed last time there are two events, adjusting, non-adjusting. You need to determine, and these are only up to the date of report signing date, not after the share issue date. After the report financial issue date, this event does not materialize. Now, adjusting, non-adjusting, we have talked about. I'll just re summarize. So adjusting, when we say, remember the concept. It provides further evidence because you need to remember this because I'm going to ask a question now shortly on this. It provides evidence of conditions that existed at balance sheet date. Figures are updated to reflect them. Something was at balance sheet date, we reflect the figures to update them. Like, for example, a customer owing 40 lakhs was declared bankrupt on 20th April before the report was signed. The debt was already doubtful at the year end. Now the provision will be adjusted because already it was outstanding more than 6 months or 9 months, so it is doubtful and it became bankrupt. So I will make a bigger provision. Somebody can always argue, Sumit, but he actually made bankrupt on 20th April. So why we are travel back in time and seeing on 31st of March? In 31st of March, we know he's not being paying me from last 6 months, long outstanding. So I need to create a provision. Now let's say if I would have created a provision of 50%, was that a scientific basis or a judgmental basis? It was a judgmental basis. I would have assumed he would pay me, he may not pay me, so 50% I would have made. But when I came to know on 20th April, the guy who was not paying me from last whole 1 year is actually now fully bankrupt. I will not get even any single penny. Shall I continue showing 50% provision or I should have jacked it up to 100%? So the standard says where you think there is already an existence that he was already defaulter, he was already not paying, you need to adjust the event. Non-adjusting means conditions arose after the balance sheet date. We will not adjust it, but will disclose if material. With a simple example, 15th April, entire warehouse got fire. The audit will sign on 30th June, but warehouse burned on 15th April, 31st March, and what should be done? So, was there a fire position as on 31st March? Answer is no. So, then it will not be adjusted at all. It will not be impacted at all. The asset will remain as it is. Only in the notes to accounts you will mention that okay, as on 30th, 15th of April, it has burned fully, the damages are filed, but it will not be adjusted at all because the fire was not there at all. Now it is the responsibility of the auditor to ensure he perform these procedures to ensure subsequent events requiring adjustments or disclosure are taken care of. Typical audit procedures for him would be he will obtain the understanding of management procedures, how management identifies subsequent events. Then he will inquire with the management and those charged with governance about judgmental or estimation. He will review the board reports to ensure anything need to be reflected in the financial statement is taken care of. Read entities interim financial statement to see if they impact, and always take written representation that subsequent events are taken care of. Say, for example, board minutes 31st March, report signed 20th May, auditor approves 2 crore settlement for a lawsuit, disclose the content liability at year end. Now, what should be done? There was a content liability as on 31st March. On 20th May, the the board settlement happens between the audit period. So it need to be adjusted because now it is no more contingent. You know that from that audit report date to till date it has been concluded. So you need to book it as a provision. Now after the report date, once I report is over, I have only reactive duty. I cannot do any adjustments. Adjustments are not permissible. So if I came to any fact which would have changed the report, if I came to know after my reports are issued, I will discuss with management and see if amendment is needed. If amendment is needed, I'll issue a new audit report. It can be dual dated for original and amended matter. So there is only so this dual dated concept, if you study, is prevalent in US, UK. Many examples you will find it. In India, there is hardly any example of dual dated. You will at least know it. Dual date concept is, let's say out of 10 items of balance sheet, 9 no required no changes. I'm not working on 9. So I've issued an audit report. I came to know facts later on, and one fact needs substantial. Let's say only in inventory. Now I can issue one audit report with dual dating only for inventory amendment matters. That can be done. If financials are issued to all, I can still try to recall them, but that is difficult. So that you need to keep in mind how to handle these kind of stuff. Practically, it does not happen much in usage. Now, read this question and I'll read this for you, and you need to tell me what you think would be the best answer. ABC Private Limited year end is 31st March 26. Report is signed on 25th May 2026. On 10th May 2026, auditors learn a major customer was owing 80 lakh at the year end. He was a good customer till 31st March 26. He filed for insolvency on 5th May due to a sudden unrelated cyber fraud loss happened on 3rd May 26 to him. Now my question is, will this be adjusting event or non-adjusting event? Take 30 seconds of yours and think, give me a logical, rational answer. What do you think? Any quick thoughts on this? Any thoughts you have on this? Will this be a adjusting event or non-adjusting event?
Yes,
And
sir.
again,
Sir,
okay. Yes, sir.
it's not a adjusting event. It is not
Okay.
adjusting event as there is no existence of it as on 31st March, but disclosure is needed. Sucheta is replying on
Very,
that.
very good to hear, Sucheta, your views. This, if you have this kind of clarity, for sure you can easily crack the audit paper in theory and in real life. A lot of people take it negatively. Subsequent event does not become everything negative. Yes, a customer has become bad on 5th of May, but is it related to event as on 31st March? Answer was no. So it is a non-adjusting event. So good, Sacheta. Very few I get these kind of right answers to these questions because we are all biased with negative thoughts of booking an expense. So something happens, so we need to always analyze. So that's I said, always understand, was this condition existing on the balance sheet date? Answer is no, then it will never be adjusting event. Even though he may be the biggest customer, the only single customer, you need to always give a declaration. You will give a disclosure that yes, one of the major customer whom we are 80 lakh was due is gone into IBC and may not get any money. Provision will need to be incurred. You need to give the facts as a disclosure, not to as an adjustment, because this is a after year end unrelated event. No condition exists on 31st March. So this falls before the report date. So since it is before the report date, that is 25th May, so I need to make adjustments in terms of disclosures, not a financial impact adjustments. So ensure whenever you apply a logic, think logically. Don't just go with a blanket biased view that after subsequent event, after 31st March, anything happens wrong, let us take it back and hit the P&L. That should not be the intent. Analyze, see where it fits the definition, then you can move on. Now, what do you think would be what do you think would be the answer to these questions? So we'll take question one. A company's FS date is 31st March. Audit report signed on 20th May. On 5th May, auditor learns a fire on 2nd May destroyed a fully insured warehouse. How should you treat it? Adjust the financial statement for the loss. Ignore it. Happened after the report date. Uh, disclose as a non-existing event. Condition over after year end. Restate the prior year financial statements. What should be done? And the second question would be, what is the auditor's duty regarding subsequent event after the date of auditor's report, but before FS are issued? Continue the same active procedure, no obligation, but must respond if fact becomes known. Responsibility ends completely once the report is signed. Must re-audit the entire financial statements. Any quick answer to question one and question two you would like to have? What do you think could be? Any idea what do you think it could be?
Yes, few students have replied, sir.
Yes, sir.
Just wait. Question number one, answer is C.
Okay.
Bindu and Sucheta have given the same answer, C.
So question number one, your answer C is correct. So because it is occurred after the balance sheet, so it does not reflect condition of 31st March, so it will be a non-adjusting, even though it may be. So this answer does not get impacted by the word fully insured or uninsured. Even is uh, even if is uh, even if it is uninsured, even then the answer will be it will not be adjusted. because it will, you will not adjust it even if they say, because here people get confused. Okay, it is fully insured, that means no loss. No, even it would be uninsured, then also you will not adjust it. Just give a disclosure. And regarding the question B, again understand, when you issue the report, after that there is no active procedures. It is a reactive procedures. 560 does not say you to go ahead and do any active procedures. You can just discuss with the management, but you can't do anything. It is the discussion with the management and determine FS needs amendment. Unlike the procedures which we need to do active for adjustment, non-adjustment is not for this. And that day I also just touch base, when you go for Ind AS 10, that is events occurring after the balance sheet date, just remember the difference between 560 and Ind AS 10 is Ind AS 10 stops till here, that is up to the audit report date. And SA 60 goes even after the audit report date till the statements are issued to the public. So this is more broader as compared to Ind AS 10, if the reach. Now, going concern, we just talked about on a very basics of going concern last time, that the shareholders, the regulators expect when auditor is signing that he believes that 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 going concern company will continue for at least 1 year. Can anybody let me know what will happen? What is the biggest change happen when the going concern is not met? What is the biggest risk if the going concern is not met? Either the biggest risk or something which auditor need to take care if the going concern is not met. What will happen if the going concern is not met? Any quick thoughts? What will happen? What I need to take care as an auditor is a huge impact if the going concern concept does not materialize. Any quick thoughts? Any quick thoughts? What will happen if going concern event is not? So I assessed and I realized company is not going to continue. So what I need to do? This fact will change what? What does it will change? Any thoughts? It's a very serious question and very significant question to understand. What will happen if the answer comes yes, you are not going to continue as a going concern? And client is also admitting that okay, if I have no father, if I have no shareholder, if I have no shareholder who is willing to pay, I need to have subsidiary, need to have a holding. Somebody need to have somebody to take care of it. And if the shareholder says I'm not going to put any further money, and company is going to die, that's it, going to die. So what does it fundamental change? The fundamental change that will happen immediately, the entire financial statement will go for a toss. Why it will go for a toss? Because till now, till the time you are assuming it's a going concern, everything would have been recorded on fair value, historical cost basis. The moment you say, no, no, I am not going to continue forever, then you need to go for liquidation value. Then you need to go for asset held for sale. Then you need to treat books as if you are going to sell the assets and what value you will derive from it. So that leads a huge responsibility on accountants and auditors to ensure when this is not met, what should be there. It is a fundamental assumptions that company is going to continue. That's why, and that's a basic assumptions. So how to test this assumption holds? So one, we need to ensure if it is a profitable company, no issues noted, you don't need to do anything. But the moment you see there is a there is a uh, so normally we prepare financials assuming I'll continue. I never assume that I will be liquidating. That's not the assessment. Management assess first that we are going to continue, and the auditors objects. He double confirm. So first we gather the evidence that if the management is saying it is going concern, it is appropriate evidence. So if management says I have a strong shareholder who is going to fund any shortfall, then it makes sense. Okay. So that part we need to keep in mind. Second, form a conclusion. We need to form a conclusion whether this is actually material uncertainty will exist, not exist, that you need to keep in mind. So that part also need to check. And the third foremost is you need to determine impact. What is the impact on my audit opinion and how disclose I need to give? Now, let's say there is a default of loan happen on February 26. There is a loan and I defaulted on February 26. Management says I will still make financial on a going concern basis. Now, we cannot just assume that management will said, so what is the issue of default? So let's say management has three term loans. Assume, very logically assume that, let's say company A has taken loan from ICICI Bank, HDFC Bank, and Axis Bank. All three banks have been given a loan to company A. Company A defaulted only on ICICI Bank, and other two banks have not been defaulted. Now, what do you think? If I had defaulted in one bank, will the other two banks can also ask their money to repay? Yes, no, maybe. Or they're immaterial or they're irrelevant, whether because they say you have not defaulted us, so we will not bother you, or they will still ask for repayment, early repayment. So there is a term in all the loan agreement. If you have defaulted any other financial institution loan, our loan becomes payable on call. So it becomes a cross default. One default in one bank automatically ensures all other banks have a right to withdraw their money, recall their money as soon as possible. So this might lead to a going concern. So whenever a default like happens, you need to assess whether the management has taken a consult with the bank of regularization of this default, and at least next 12 months, does the company have sufficient cash flows to pay all this? So this need to be factored in. I need to see so when I say financial impact, I need to see net liability, current position, negative operating cash flows, adverse financial ratios, loan defaults or covenant breaches, substantial losses. That all factors need to consider for financials. Operating, key management is not there. So let's say there is a company which has no CFO, no CEO, no directors taking a, that means something is wrong. Nobody would like to board a sinking ship. No customers, no licenses, labor is not willing to work. So that will show operating issues. Other could be any sanction by a regulator. Let's say if regulator, especially machines, especially manufacturing companies, fine put by manufacture Environmental Protection Act or any water waste management bodies, it becomes a huge issue. So all these factors need to be kept in mind, or changes in law. Say, for example, now the Delhi government has announced that more than 10 years of diesel cars will not be working, so that this might have a huge impact on diesel cars. So this kind of changes in law, I need to ensure on casting going concern doubt. Now, say for an example, a textile exporter loses largest customer, 60% of revenue which is used to come in January 26. So in an audit, when you say in an audit, can you say to a client, sir, last year your sale was 100 crore, this sale your sale is 40 crore, why the sale has declined? Why you're doing such a bad job? Can you say to him? We can't say to him that why your sale is declined, because it's a market factor. If you lose a customer, he can't sell it. We know the fact. So you cannot question a promoter that why your sale is not increasing. You can always discuss as a friendly that, sir, why the business is taking this shape, what are you doing as a friendly. But if tomorrow you say, sir, क्यों नहीं sale बढ़ा, he'll say, you do your job, let me do my job. This is not my job. This is not your job to tell me why I'm not doing good business. That's not job, right? So this is becomes so this we need to keep in mind how to communicate this. So let's say one of these major customer loses your client, and simultaneously you breached working capital loan covenant. So what are loan covenants generally? So whenever you will audit in any organization who has taken loan, always read the term sheet. In the term sheet, it will be written, in the term sheet, it will be written that, okay, this company need to maintain 2x of your working capital. This need to maintain 90 days stock. This need to maintain this much of reserve and surplus. This company need to maintain this much of promoters equity. If you are breaching those covenants, then it becomes an issue. Now, will that lead to a going concern issue? Maybe. So whenever we have two kind of events where operating indicator, lose of a customer, and a financial indicator, this is a strong signal for going concern assessment validation. So we need to look into the going concern procedures, evaluate them together and not in isolation, and then take a call. Not necessary every losing of customer will lead to a going concern default issue. You need to just check it out. So let's say I lost a customer in US, and I'll give an example of if you remember some time back, a issue happened with India and Maldives. Maldives country made some statement against India, some statement to one of the political leaders, and immediately everybody boycotted Maldives. Right? Many of the tourism companies say that now you're not going to work with Maldives. So Maldives revenue took a major hit. So this was a custom. Now this could lead to a lot of going concern issue for various travel companies. But however, if those travel companies says, okay, we lost India as a customer, but now we are getting China, we are getting Japan, or any other country we are getting adding on. So there you cannot say, no, no, you need to always book a loss. They need to say, okay, what we are doing. So that part you need to keep in mind. Audit procedure we discussed. Whenever we need to indicator arises, you have a doubt, follow the procedures, corroborating steps. It all need to be followed. Identify the indicator, extend assessment, ask management to assess, evaluate the management plans, feasibility of cash flows. Always ask that these are always done by management. You review it, examine independently, externally, and then form an independent view and decide how disclosure should be mentioned. Always ask management to make assessments. You never do that. Ask management to ensure fresh capital, restructuring. Are you selling of the extra surplus assets? Condition post year ends, obtain written representation on plan and facilities. A manufacturer shows negative net worth, presents a signed term sheet. Let's say a company you're auditing has a negative net worth, all share capital eroded, company incurred huge loss. So that means it is saying you may not be able to continue. But then, but then he presents a signed term sheet where one investor is saying, I'm going to invest 50 crore rupees in it in next 90 days. And board has also given a cost cutting plan. Now, this is a future. You may or you may not. So you need to ensure that, okay, what is the probability the management will actually able to generate the funds? Investor will actually put in money. What if he does not put, how long we can sustain? So you need to make those analysis. How is the board going to cost cut the plan? So when you do look into all this, you can sustain certain numbers. Now, so what needs to be done is when going concern basis is appropriate, where you are sure that yes, company is going to continue, but you think material uncertainty will always exist. So I said, okay, let's say for example, uh, there is a condition where I don't know whether this actually happened or not. Like for example of say for example of government policy of diesel cars banning. Tomorrow, if the government says we are also thinking for petrol, they just said also thinking of, they have not mentioned. So going concern basis is appropriate, but material uncertainty exists. Then I just need to give a disclosure with unmodified opinion. So I will not modify my opinion. I'll just add one para, material uncertainty related to going concern. So I can say that company has got a commitment from shareholders, but we have not qualified for this because shareholder may or may not give later on, right? So that kind of commitment we take it. Where going concern is appropriate and material concern existence, but disclosures are inadequate, then we give a qualification or adverse opinion. Where going concern basis is inappropriate, then you need to give adverse opinion, because if the financials for which I am working on does not stand on going concern, adverse opinion. If management unwilling to do the assessment, put it to the disclaimer or qualification. Say, for example, a company discloses a material uncertainty for going concern on a regulatory investigation that could result in a large penalty. It could be a significant penalty. So then you can mention unmodified opinion with a management remark, with a remark under MU or GC para, that there is a penalty going on, which can be a huge penalty. I'll give you example of pharma companies. If you see pharma companies, they get huge penalties on review. Somebody comes from US FDA department and they will see your premises. If in your premises they find any iota inch of dust or any uh, non-compliance, it will be a huge penalty. I'll give one very funny example of this. In one of the export-oriented companies, there is a policy that uh, child labor will not be permitted. So anything below 18 will not need to be working in that factory. So one European organization came to review to give them a clearance, and they checked the labor register. They saw nobody is below 18, all are working fine, and they were checking all other parameters. Suddenly, in the lunchtime, a tea boy came, and the tea boy was 14, 15 years of age. And bad luck was so good that the European Commission people saw that tea boy serving tea to various people, and he was hardly 14, 15. And they make this a big issue. And they say, not even you can work, your vendor should not also work. And the company pleaded that, this is not in my hand. I can control my company. I can say, I can put a policy for my company that I will not take child laborers as working people. I can't stop the vendors to do that. And they say, no, you need to ensure that you will also stop working with vendors. Then only this kind of policies will get uh, closed. Therefore, they put a huge penalty on them which is under debate. So they wrote a penalty in the report that a European Commission came to us and put a fine of $100,000, and in case which we are contesting, however, we are going to win it. So you can give a disclosure in the report with this kind of paragraph. So now, so this point we discussed. What period we should evaluate for going concern assessment? It is minimum 12 months. We need to always look for minimum 12 months. That part we need to keep in mind. Always look for 12 months. That's the bare minimum. Okay. Now comes very important point, evaluation of misstatements identified during the audit. Now let's say there are 20 items you have audited. You audited sales, purchases, you audited salary expenses, rent expenses, you audited other income, interest income, FD income, income from sale of shares, you audited, let's say, provision for expenses, warranties. So there are 20 line items you have audited. Let's say the materiality limit is 1 lakh rupees. 1 lakh is the materiality limit. You determine materiality initially on the start of audit, either on the profit, net profit, revenue, total assets, depending on each company, each factors you will appoint. So materiality, you have taken it out. Now the materiality is 1 lakh. Now is this 1 lakh per line item, or 1 lakh is overall materiality total? So I'm sure you will agree this 1 lakh is overall materiality. It cannot happen that if you find a mistake of 50,000 in all those 20 line items, client cannot come and say, oh, sir, please leave it. There's only 50,000. Your material is 1 lakh. So it is below covered. So this 1 lakh is not total, not individual. It is total materiality. That's why we need to identify all the misstatements happened put it one place and see what is the total quantum. Can we leave? We can't leave. That factor you need to keep in mind. If you can't leave it, then we need to be very, very categorically you need to look that it is a true and unfair if you're not able to adjust that. Now, certain facts. So there are could be statements. So what are misstatements? Misstatements are like amount, classification, presentation of reported item. There could be a chance of factual misstatements where factually something would be wrong. So it could be I need to book a revenue of rental expense of 12 months. You booked only 11 months. But it's not a judgmental, it's a factual error. I purchased an item of 1,900. You recorded it as 9,100. So it's not a judgmental error, it's a factual error. So you need to look at it. Like, for example, an invoice of 3 lakh recorded as 30 lakhs. It's a data entry error, it's a factual error. Many times, I'm sure you will also find this when you go for actual audits. Sometimes when you are doing an audit of multi-currency companies, uh, uh, let's say you take off Nepal, Bangladesh, Dubai, Qatar. So if the in one country it is dirhams, another country it is dinars, it will be exactly the same. So you'll be able to. So sometimes it happens you may wrongly put it as dollars or wrongly take it dirhams as dinar same value, but there is a difference of 1/10th value. So that part you need to always keep in mind that factually it is error that you need to check it. Now then there could be issues of judgmental. Judgmental could be where there is an accounting policy and say for example you have uh, you have a software that you expect will go for 5 years, management expect to go for 10 years. Now there is a judgmental issue. Now, why it is judgmental? Because maybe due to change in because maybe due to change in maybe due to change in the technological environment, it will easily go. I'll give an example. If you remember when Chat GPT came in, their their share price skyrocketed and it was reaching very high. And then suddenly China DeepSeek came. And the moment DeepSeek came, 20% of the shares of Nvidia got damaged same day. Because till the time you were in monopoly, you could charge any pricing. And the moment you got a competitor who is also as competent as you are, you got a dent in your revenue. So now, whether my software will work for 5 years or 10 years depend on judgmental. Your judgment, my judgment can also differ. It is always not necessary to argue with the client saying that you need to follow my view. If he's not following your view, you need to see whether this misstatement is so material that I need to put it in the report or it can ignore. Just make that difference. So it is not necessary that I need to always fight. You need to put your point. You should be assertive, not aggressive, because ultimately financial belongs to management. If the management does not want to make an adjustment, you can't push the management. Then your job is to give a disqualification disclaimer. Opinion should be brought which represents your viewpoint. Client agree, do not agree, it's a secondary story. Now, then there could be a projected misstatement. Like if I do a sample testing and I take 10 samples for checking, but out of 10 samples, 3 samples got errors. So that means my risk rate is 30%. At least out of 100 transactions, 30 are showing error generally. So I need to relook on the basis of do I need to increase my sample size? Because I cannot say I just check 10, 3 are wrong and it's okay. You need to look further. So ensure what is your size of sample to get a comfort. Because audit evidence should be sustainable and efficient and effective audit evidence. First, we always accumulate. Just to give you one idea, one fact, in one of the audit committees, in one of the NAFRA audit committees, they penalized the audit firm only because they could not demonstrate at one place where are all the errors were highlighted. So what did the audit firm did? Audit firm did proper audit in every place, whatever errors were found, they mentioned it in that respective working papers. That okay, this is the working paper, this is the error they have put in, but they could not find anywhere one work paper where all individual line item errors are documented. Because of this, they say if you have not documented at one place, how would you know this is material or immaterial? So if I need to really show that these are trivial, I need to put them somewhere in a one place. So I need to accumulate all misstatements found other than those which are trivial. So we put it material misstatements. Then we need to see whether these are such a the total is such that I need to get it corrected or I can go with undetected misstatements. What we need to see. Because based on this, what is the risk? What is the risk identified based on that? That okay, you have find out certain amount. If I find out certain amount, does there a probability exist that there will be more? There may be a more material misstatement that would have been missed. Possible possibility exists. Yes, it do exist. So we need to be very careful when we are doing misstatements accumulation. Identify all misstatements. Communicate to all them on the communicate to all the stakeholders, all the client, all the accounting departments. It is always preferred to get them rectified. If you get it rectified, nothing best than that. Because then it it do not leave much effort on you. So always request management that please rectify them. If they do not rectify for whatever reasons, then understand. If they do not rectify, then can we still say it is free from material misstatement? See again, understand the word. It is not saying free from misstatement. Misstatement will be there, and a small misstatement is acceptable. We are okay to accept a small misstatement, but not a material misstatement. So that part we need to keep in mind. So let's say a team identifies 8 lakh rupees unrecorded liability, overcapitalized expense of 2 lakh rupees, and a 500 rupees casting total error. Now, what should we fight for? Shall we fight for 500 rupees? It is totally trivial. So I don't need to even put in my records, discuss it, can be totally ignored. Regarding overcapitalize of 2 lakhs and 8 lakhs, that I can communicate with the management saying that this is wrong. You need to record this or record that. So that part is in my hands, which I can always take it with them. So you need to see what is relevant. Now, wherever there are qualitative factor or quantitative factors, two factors we need to see. Always understand whether they are misstatements material individually or in aggregate. In individually, if they are small, in individually if they are very, very small, but total they become aggregate, then also it impacts my audit opinion. So that way we need to always look into the audit opinion. Say for example, my overall materiality is 1 crore rupees. Individual misstatements are 30, 25, 20, each below materiality. Total they are 75 lakhs, close to threshold. Now I will all club together and then see how it is. So if it is 1 crore, I will not wait for 1 crore because 1 crore is for known known errors. There is a risk of unknown errors also in the financial statement. So I need to ensure So I need to ensure that I just do not keep. So let's say there is a hypothetically 30, 25, 20, and then we got 24 lakhs. So total become 99 lakhs. Can we give an argument? Okay, it is below 1 crore, so ignore it. No, this is a overall materiality. I need to leave room for certain more errors that might be also there, which I have not identified. So always try to ensure client rectifies them. So you have sufficient gap between 1 crore 75 lakhs and some more. So it is easy for you to justify your report. Now, one important point you need to keep in mind, very, very important, and this you will find at many places when you audit. Whenever any error is due to fraud, whenever any change in factors, accounting mismatch is by fraud, whatever the quantum of amount is, it is never trivial. If a director steals of 100,000 rupees or 5,000 rupees or 10,000 rupees for a company having 100 crore balance, we cannot say it's a small, trivial, 100,000 does not matter. Company is 100 crores. Even 10,000 from that company is a serious offense, because if it is a fraud coming from KMP, you need to have highlight mandatory. You cannot ignore it saying that immaterial below materiality. So fraud has no materiality issue that we need to keep in mind. Now, so whenever you need to make a working paper, we call it SUD. You will use the term, you will see the term SUD used a lot. SUD is summary of unadjusted differences. So you try to put all the differences somewhere. So you come to know how much differences you have. And then you need to inform to the audit committee, those are with governance, that okay, during there we audited, and these are certain uh, uncorrected errors. So the committee can take a call. They can push the management, or they can say, okay, if it is so immaterial, we can ignore it. So it is very important to document this at one place, else you'll not be able to communicate to the those charged with governance, which is a very important point right now, that you need to go and communicate with them. Now there are two questions. You can quickly let me know what do you think would be your view. Overall mortality is 1 crore. Auditor find three errors totaling of 90 lakhs, 35 lakh, 30 lakh, 25 lakhs. What do you think each auditor should do? Ignore them. It is individually immaterial. Evaluate their effect before concluding. Qualify the opinion. Report only the largest to the management, 35 lakhs. So that's a question number one. And question number two, a 40 lakh understatement happens of warranty provision due to management estimate of failure rates. In the auditor view is unreasonable. What type of misstatement is this? If you can give your quick view on this. Any view on this? Any views on this? Where do you think? What does it says? So it is option B, where I need to do a careful evaluation, because my 1 crore is a total limit and I'm getting 90 lakh, which is very near to the threshold. So I need to do a thorough evaluation because a small inch here and there can make a huge difference. And the judgmental difference is judgmental misstatement, where you have a view that you will record a provision based on failure rates. Somebody can have a different view, so that you can always check it. So that was on material misstatements. Now comes written representations. So the best representation is external evidence. The best evidence are external evidences. So let's say, for example, if I need to take a confirmation of bank, it is the bank who should tell me that, okay, our balance is this. It is external. Where external are not possible, then we go for internal evidence. That is management representation. Now, management representation is very, very important for you to take a view that who gives the financial statements. It's management who gives the financial statement. Now, what is the guarantee that management has given you all numbers correctly? They have not hidden anything to you. Let's say they have three bank accounts. They have not hidden one bank account to you, and they have told that we have only two bank accounts. So you need to have some comfort. Somebody should tell what is the exact story. Now, that part we need to understand. We call it, you may also call it management representation letter or written representations under 580. Different people use different terminology, LR, letter of representation, however you use it. Generally, we use MRL, management representation letter. This letter gives you one sort of evidence. It is formally said by management that, okay, we are giving this statement. For matters I have already communicated to the auditor during the audit process. Can I take this? Can I take this as my shield, saying that I did not did a physical stock count, let's say, and management said our stock is 1 lakh quantities as on 31st March at this particular date. Can I say management has committed, so it is right, or it is my responsibility to do a stock count and verify it? So you cannot escape from the basic things which you need to follow. It is your duty to ensure stock counts, stock taking procedures. So you cannot say, okay, management has said this, it's fine. You need to apply your own basis. And so this is we take from the management. Uh, this is so this is a necessary evidence, but again, it is not sufficient. Understand, this is a very, very important point. A lot of people have a view that, okay, I have taken an MRL, my job is reduced. No. What the standard says, if the auditor could have obtained these evidences from somewhere else on their own, it should not be substantiated by the auditor, by the client only. He should have taken it from somewhere independently. Client is just for support. So this gives a commitment that management commits you that we have fulfilled all responsibility. Now, very important point is, who is giving this your MRL? Is it a reasonable senior person? Is a very lower person in the hierarchy, let's say accounting clerk or secretary, HR head? Will that make a difference? Or it should be given by CEO, CFOs, or managing partner, something who is on the top of the affair? Or if it is okay if I take from anybody else, this should be taken only from the people who are into control of the affairs of the organization, either by the board of directors or the audit committee or the chairman or the CEO, but not with all. A written representation is you should always take from, not I need to take from every individual, but okay, it is only from CEO, CFO, that is sufficient. because we assume that they are the one who's controlling the entire organization. So if they've given, one should be fine. Now, normally there is a standard guidance note on MRL. ICI has issued a very detailed note what needs to be taken from there. So one is standard. Then for your each respective client, you need to modify for your clients per se. So let's say your client has respective issue on agriculture, IES Index 41, certain issues on other products. You can always ask the client to tailor made it for yourself. So that can be done. Now, ensure a lot of people forget this. These points also should become under MRL, that there are no material uncorrected misstatements that will cause impact. Going concern assessment has been done and find reasonably good. Subsequent events have what is required have been adjusted or disclosed. Related party transactions, if any litigation, fraud, all these type of factors which are very, very relevant factors, if they have been documented, it will safeguard the management and safeguard both. So that point we need to be kept in mind. So therefore, like this kind of letter will always help you that we confirm that in our opinion, effect of uncorrected misstatements are immaterial and therefore we are not correcting it. So this way, nobody can blame the auditor that you have not told them or it is not rectified properly. So this way it is easy for the auditors. Very, very important point to understand in MRL, very, very important point. It should be not after the audit report date. We always take the letter of MRL as near to the audit signing date, but not after the date. If I take after the date, it is of no value. That means I gave the evidences, I gave the audit opinion, but I got the evidences later on. So it is not good for you. So always ensure either it can be on the same date, but at least not after that. You can always take before that, but not after that. Now, we need to always ensure the management who is giving in a genuine good faith. It is not that management can sign anything. So wherever management is not willing to give MRL, that means that should be a red flag for you. So if there are related party transactions identification, it will not be done by auditor. It is the management who identify related party transactions and tell the auditor that these are our related party transactions. Then auditor is a more impact. The the stat auditors or the management will it is management duty to identify these kind of transactions. If they are not giving you this disclaimer, something is wrong in that. So that way we need to see a red flag. And always understand auditor cannot take independent confirmation just from the management that okay we are going to recover it. So suppose there is a large receivable and there is a debtors who is very significant debtor. We send a management letter and the company has not signed it back. Then we just cannot say client has given a confirmation that okay I will get this money later on. That will not happen. You need to justify it post year end conversions. Post year end how many value would have been received. Sorry. Never take representations as a base of never take representations as a base of audit. First to substitute that this is the evidence. You cannot just put everything from the management and reduce your scope of work. Something which need to be worked by you, you need to get it worked. That part you need to always keep in mind. Do not take this that client has said, so it will not be done. Okay. So always focus on this. they do not replace evidence that is otherwise obtainable. So as I told you, bank balance confirmation, debtors balances confirmation, something which I can take directly from somewhere cannot be taken by the standard itself. Now, the question which I discussed, that auditor cannot independently confirm large receivable, manual refers the representation, what should auditor do? Shall I take representation as evidence, perform alternative procedures, disclaim, or ignore the balance as material, immaterial? Think what will you do? Logically, you will get it right. What date should the representative letter should be dated? We discussed date of the financial statements. So it should not be after the date of the report. So here the correct answer is as far as practical, but not after the date of report. And here we need to perform alternate procedures to ensure that the representation can get the value. Now, this is something very important to understand, how to report, how to communicate with those charged with governance. Now, there is a very interesting case happened by NFRA, NAFRA, where they questioned the audit firm, saying that you have not identified the correct those charged with governance. So, what do you mean by those charged with governance? Are generally the officials, generally the stakeholders in the organization who has the who has the supervising and controlling responsibilities. Generally, these are the board of directors. It is not the auditors. So it is auditor will always ask from the board of directors, whom should we, whom should I discuss things. Now, these are those board of directors who oversees the entity's strategic direction and accountability obligations. Generally, the board of directors or audit committee. Generally, whenever we do a audit committee discussion, auditor responsibility is the financial statement audit. I need to tell them scope and timing of the audit. I need to also tell them significant findings from the audit. So once we finish all this, I need to ensure that whatever relation and safeguards we need to keep from that company will be mentioned. What findings need to be given? Any qualitative aspects on accounting practices, any significant difficulties encountered during the audit. Now, especially any material going concern issues or any uncorrected statements which are not yet rectified. And what did you discuss? What is the MRL you expected from the CFO? And or what factors impact the audit report? One point you need to remember, before issuing any audit observation, it need to be discussed with your senior managers, because the moment you give any wrong feeling, any wrong statement, lot of business got impacted by this. So we need to be very careful. Whatever you are communicating, whatever you are qualifying, you are updating the those charged with governance, and you are telling the reason what is actually bothering you, so that it has an impact on audit report. So should we give an oral or written? It is always preferred to give a written record. This way, it will be documented and it will be acted upon, because verbally very difficult to justify. And when should be done? So generally, the timing is before the financial statements are issued. So I need to do it every either every audit discussion audit committee need to get it done, and this is very important. You need to ensure a two-way accuracy has been educated for audit purpose. It should be always two-way communication, and documentation is mandatory. Both the communication and the key contents are documented in a file. Now, whatever material incorrected misstatements are identified due to materiality, auditor, the audit firm got it increased. Practically, if you see, practically, many places, audit committee meeting and board meeting, they keep 1 day difference, many places. And the reason why they keep 1 day difference is so that whatever discussion happened today with audit committee, that can be analyzed by the board. They have 1 day to rectify if there are any issues happen. So something issue happen in your financial statement, something like that, it can be rectified next day because of the commitments. Now, what a communication should cover, minimum should cover. One, we need to cover what you should tell to the committee. So I need to tell the committee, those who are charged with governance, that what we did, and so we need to tell what are my scope and timings, audit approach, key rates, use of component auditors, and internal food auditors. Then what significant audit practice they can tell.
सुमित जी,
Yes, sir.
आपके कुछ कनेक्शन में कुछ गड़बड़ है क्या सर?
So थोड़ा सा network का because of rain network is getting, that's why I just put my video off just now कि load ज्यादा हो रहा है नेट का
ओके सर,
because we
एक्चुअली
have a rain.
ना उनके मैसेज आ रहे हैं कि वो सुन नहीं पा रहे हैं आपके ना. लॉट ऑफ
Okay,
डिस्टर्बेंस इज देयर एंड नो ऑडियो
okay. Because of
देयर.
rains, the network got issue here. Wi-Fi got issue due to rains, heavy rains here. Okay, let me. Are you able to hear clearly?
अभी तो आवाज आ रही है सर आपकी क्लियर.
अच्छा, ठीक है sir. Let us continue the same. So what we need to tell to the those charged with governance, that what is your any specific issue on significant accounting policies, because entire financials are made by accounting policies. So if you have a wrong accounting policy choice, which you need to mention to the committee, that okay, industry best practices follow this practice, your company has taken a call which is outlier, which might have an impact on comparability, which you can always tell. You need to always tell significant difficulties. It should not be like a complaining session where you are saying your team is incompetent, not giving me data. It should not be like this. It should be, you need to be in a more diplomatic manner that I think the staff is overoccupied. We are getting delayed information. Either we need to have a system of documenting information timely. So this way you communicate your matter and you have not blamed the respective person itself. Because the moment you complain about any specific person, next time when you go for an audit, will he support you? He will not support you. So always ensure, do not go for name blaming game. It is always better to tell a process and a department and tell the reasons that why we think it takes a long time. Then whatever uncorrected misstatements are there, that you need to just tell them that there are certain errors which have not been rectified and we have let it go as it is because of understanding that these are not material. And then you can always have to communicate on going concern that management has identified and did assessment and you reviewed from their work. And you need to disclose to the audit committee that you are totally independent from the organization and no impact. Just to give an update, this year only first time SEBI made mandatory all
all these points need to be communicated to those charged with governance in writing. So all board meetings, all board of directors, if you see, they will have this kind of presentation, and they also mention it should be distributed as a, it should be given as an audit committee presentation PPT. So now onward from every audit committee year end, that auditors are giving all these disclosures. They will say they are independent, they are not doing any other assignment of the company, they assess the going concern, material misstatements. All these points have been factored by them. Now, what do you think? Which of the following is not a matter SA 260 requires auditor to communicate to TCWG? So that's question one. Scope and timing, significant audit findings, auditor independence of listed company, remuneration of the audit engagement partner. There's a question one. Question two would be, when should the communication should generally take with those charged with governance? Only after financial statements are issued, at the start of the year of audit, on a timely basis, generally before statements are issued, or there is no timing requirements under section SA 260. Any quick thoughts you have on question one and question two? So the correct answer of question one is you don't need to give the remuneration package of audit engagement partner. Interestingly, this kind of disclosures is required under certain other regulations, not an audit, but certain other regulations and valuations. How much stake you have in the organization, that kind of disclosures need to be given in the valuation report in certain other regulations, not an audit. And there is, it should be on a timely basis, and especially before the statements are issued. So that why it is before the statements are issued, so that if they think that we need to make certain those adjustments, so that they can always push the management and get the adjustment done.
Sir, you are not audible, sir.
Still now?
Sir, we can't hear right now.
सर अभी नहीं सुन पा रहे?
अभी सुन पा रहे हैं सर, अभी सुन पा रहे हैं. इन द मीन टाइम मैं आपको बता देता हूँ सर, ये बिंदु बिंदु गोकिला, ये टेक्सपोर्ट टेक्सपोर्ट आपकी ये डिस्टर्बेंस आपकी यहाँ से आ रही है क्या?
ठीक है, I'll disconnect him. सर वो कह रहे हैं कि एक बार डिस्कनेक्ट करके वापस से कनेक्ट कर लीजिए.
ठीक है सर, ठीक है सर,
तो
आप कर लो.
I'll do in a minute. I'll do in a minute. अभी जैसा exit and come back.
राइट सर. Students, wait for a minute. Sir will join after the because he has disconnected his connection, and he will join in a minute. Please wait, students.
I hope this is audible now. Okay. So, what was happening? So we had those charged with governance. Okay. So
Yes, sir.
why they always want it to be issued before they want the discussion to be before the financial statement are issued, is that the audit committee feels or the board feels that we need to make those changes, make our presentation better. Because see, the CEOs will always try to avoid changing. They will say, okay, sir, leave it this time. It's a small matter. We have already given the results to the board. We have prepared it. So ignore this time. So they will always push you. They will always push you not to highlight those changes. But it is your duty to discuss with the audit committee. And if they insist that this needs to be changed, then the management cannot refuse. So they will get it done. Now we'll take the last part, which is very important part, what to communicate. Apart from all these things, what you find out, that is fine. But very, very important to communicate deficiencies in internal control to those charged with governance and management. Now, my one question is, what if there is no control? Is it my duty to suggest what is the best control to them? Yes, no, maybe. Any thoughts, Sucheta or anyone else? There is no internal control. So what do you think? Is it my is it my duty to give them the best controls, suggest them, guide them, or it is not my duty? What is your view?
Students have not yet responded, sir.
No issues, sir, no issues. So shall we do, shall we not do? So the standard is very clear. They say you need to communicate deficiency means when there is a deficiency in control. It does not say you identify the best control from them and tell them. If they're not making it, your job is not to find which is the best control for them. So this is what it is. You tell a management that look, you put a control, but that control is not working. Why do I put any control? So let's say, for example, when you go to any organization, any big building, you will find a security guard standing outside there and he will write name, number, you're meeting which organization, which floor. So that's a control they have. But if let's say nobody keeps any track who is coming in the building, who is going out of the building, it leads to a serious risk issues, serious issue on data safety, safety of the person, safety of the organization. So you need to tell that, okay, you put a system that the security guard will write name, number of who will come, at what time he will come. Now nobody was sitting there. So that's a internal control you need to mention. This becomes more critical when your organization is NBFC or a financial institution where unauthorized people can access and can have a control issue. So that part we need to always mention. Now, deficiency in internal control means when the control is designed, implemented, or operated, that it cannot prevent, detect, or correct misstatement. That means this control is not relevant. So I designed something that only authorized people can enter in by putting a ID cards or something. And when nobody is even checking that, so it is not operated to recognize on a timely basis. Say, for example, I have a policy in my organization that whenever there is so you will always find limits in the various organization. We call it authorization approval metrics, or approval metrics, different terms for it. So certain organization has a policy that expense of 5,000 to 50,000 will be passed by junior accountant, 50,000 to 1 lakh will be passed by senior accountant, 1 lakh to 5,000, 5 lakh will be passed by CFO, and from 5 lakh to above will be only passed by CEO. So if there are certain protocols, or they will say, okay, above 5 lakh, it will be signed by two people, CFO and CEO both. So where there are two level of approvals, but only one person has signed, that's a design deficiency, that you put a control, but it's not being functioned. Significant deficiency is where it is very important to tell to the committee. Say, for example, there is no maker and checker. You have only one person in finance team, and he is making the entire entries. So we are not saying the person is wrong. What we are saying, that that it is not that only one person is making is wrong. We are saying that there should be a process of maker and checker. Since we have only one maker, there could be a chances of errors in financial statement. So that's a process lapse. So we want someone to be supervise that. So this is significant deficiency which we will tell to the management. Because if something goes wrong in finance function, nobody can get it rectified. So we need a proper check. What are the judgment factors we can look into it? Any deficiency you noted, which could lead to misstatement, could lead to loss or fraud, or can have uh, link to other deficiencies, or can have a huge impact on financial statements, then you need to put, say, for example, it's a e-portal company, e-commerce company. In an e-commerce company, if there is no timely reconciliation of orders sold, orders booked, money came, money went, later on in the year end, if you do it once together, it will be a huge issue. So it will be timely reconciliation. So if that is not happening, then you need to mention to the committee that this is a huge issue they need to keep in mind. So therefore, whenever there is a review and all, that factor you need to keep in mind. Now, whenever there is a deficiency, auditor will review the deficiency, will see is it good for governance or it stop at management. So say, for example, an item of 500 rupees not posted, it is not a significant that it need to go to the board of directors. It could be asked at management. So we need to see if it is significant, it should go to TCWG mandatory in writing. You need to communicate on a timely basis that this is the areas I issued, this is the impact which can have a potential impact, and it should be also communicated to management unless inappropriate. Inappropriate means where you are complaining about the management, then you can skip towards sending them. Suppose if the management is doing a fraud, then you will not tell that report to management also. But wherever, if it is not significant but important, then you will mention to the management only. It can be written, communication, in writing or oral. It is up to the auditor judgment. Say, for example, this is very significant. Any changes in vendors' data should be by maker and checker. What is the risk you can see in a maker and checker? If there is no maker and checker, if somebody is changing the vendor's master data, but it is not getting independent review before accepting the change, what is the risk? I'll give one example. In one company, CFO came to know that I have 1,000 shareholders who are, so it's one of the 1,000 shareholders in one of the banks. They came to know there are 1,000 bankers, customers who are inactive for last 5 years. Last 5 years they are inactive. They have not traded. They have not came to withdraw any money. What he did was he changed the mobile numbers in all those 1,000 bank accounts. Now do I need to explain further or you understood? By just changing one mobile number, what damage could have been done in those bank accounts? So he bought a fake SIM, bought a fake number on fake KYC, put all the 1,000 customers in the same number, and whenever a money need to be withdrawn, he will give them a OTP from that same number. Since it was inactive, people did not came to know for long. They all came to know when they went to account closure, and then they saw nothing was there in account. The total fraud committed was of more than 3.8 crore fraud. And that a simple cash did, because at that time bank had no such system of maker and checker control. So that way we need to keep in mind. Similar happened with one of the companies in giving dividends. Because when you give dividend and you know the shareholders who are not traceable, died, you're not able to find, then you are encashing checks on their behalf. So that part we need to keep in mind. Which statements about the auditor's duty to identify internal controls exist? This is a very interesting question to understand. Which statement about the auditor's duty to identify internal control exists? Auditor must design specific procedures solely to search for control deficiencies. Duty to communicate arise from deficiencies. No separate search is required. Audit is not required to communicate. Only significant deficiency need ever be identified. This is question 1. Question 2. Deficiencies in control must be communicated to TCWG orally at audit discretion, in writing on a timely basis, only if requested, or in next year audit. So this one I'm sure you all would know, it is mandatory on a writing basis, because when it is to TCWG, it has to be on a writing basis. So here, this section, this is very important to understand. SA 265 does not require the auditor to design procedures specifically to find deficiency. We communicate those deficiencies which we find during the audit procedures. If I don't find any deficiency, I don't need to find and complain back. It is where we find something in audit procedures, then we communicate. Now, how these 6 standards are very relevant. So wherever you have a going concern, you need to inform to the committee. Wherever there's a misstatement which is significant to the committee, what management has given a representation, you need to inform to the committee. All control deficiencies need to inform to the committee. Any subsequent events which you think are significant enough need to be informed to the committee. So a subsequent event can have a misstatement under SA 450. So that's a linkage. Management going concern can be confirmed by written representation. Uncorrected misstatements can have a written representation based on immateriality. Going concern and all can be communicated to TCWG that this is a risk we foresee. Any weak control can always put into misstatements, which will tell these are already interlinked. So we need to understand when we audit, we need to always link whom to tell, what to tell, because ultimate recipient is those charged with governance. And you need to always make a balance between management and TCWG. Say, for example, so this example we have discussed, I'll take another example. SA 560, till the date of audit report, 2 windows except adjust or disclose. After you issue the report, only reactive. 570, you need to always look for next 12 months, whether it can continue to same opinion. 450, change what you can change. In what is not changed, judge it is significant or not significant. 580, whatever is given written confirmation, just see whether it supports the evidences. It is never replacement, but it supports. 260, you need to tell your scope. What do you find in the objective? What is the independence? What communicated clearly and in writing to governance? grade the deficiency and route it. Either you tell to the management or TCWG. When it is TCWG, it has mandatory in writing. When it is to management, can be orally. Now let me take you one case, one NAFRA order, and we need to you need to understand why it is so important to why it is very relevant to have proper documentation, because the proof of the pudding is in eating only, and the proof of your audit is in your documentation only. Just give me 1 minute. Let me figure out the NAFTA paper. Just and if you have not documented properly, the regulator will always question you. So just give me a minute. Just just give me 1 minute. Okay. So now we all know that there is a regulatory body, NFRA, National Financial Regulating Authority, that looks for primarily listed company audits requirement. And as I mentioned, ultimately what will be test the standard of work is only the documentation. You have done the best job, but not documented, it will not be counted for. So what happens here, if you see here, you cannot have the audit working paper prepared after the audit report date. So how to tell that it is not prepared after the audit working paper date? See, as long as it is physical copy, hard copy you maintain, you can always say, I prepared this date, that date. There is no evidence of hard copy, physical papers. But nowadays, entire majority of the audit firms are coming into online working paper tools where backdating is not possible. I make one changes in the document, it will tell on what date it impacted, from which laptop it got impacted, what time it got impacted. So any change in any of the data creation can have a huge issue. So whenever you are documenting, you need to ensure you do not change. All documentation should be done timely, and that's why I said follow the Japanese principle: do it once, do it right. Don't change the file later on, because the moment you do any changes later on, it is like evidence tampering of the evidence. You might added something new. I'll give you a small example. Let's say when you do a audit, at the time data's data's balance conversion did not came, and you relied on subsequent clearance and comforted. Later on, you got this data's confirmation and you amended the audit file and put it there. That may not be the right way. So something which came after the audit issue date, after the 60 days get over, which is audit filing, compiling of the audit documents. If you're getting something later, do not add the documents. Else the regulator is very strict, and they say that if you do any changes in audit working paper. Now, see, very important is audit working paper will be reviewed to ensure that all section work has been done. So you need to ensure that there is no afterthought having no basis, as an afterthought. So they say it should not happen that you are changing anything later on. So you need to be very careful when we are auditing, when we are reviewing, that all documentation is very relevant, and subsequent events and all are all filed in a correctly. And imagine at least the document should be kept like this, that if tomorrow everybody in the organization leaves, somebody who joins the organization can show to the regulator, this is what the previous team did. And we just never think yourself once you join that you are just an article. You're not an article. You will be almost taking a huge responsibility of taking an audit. You will be a very key team member. So ensure that whatever you document It will be used 2, 3, 5 years later whenever anything required. So ensure that document should be perfect. Don't just do copy paste without analyzing and put it in the file. Ensure whatever you're documenting, you can easily justify and stand it if tomorrow any question happens. Any specific question you have, we can take it up. Else, we can conclude.
No question is there, sir, as of now.
Please, please. Okay.
Over from your side, sir.
Yes, sir.
Okay, sir. So, thank you, sir. Thank you for 2 wonderful sessions. We are really grateful to you, Sumit sir. Thank you
Thank
so
you.
much, sir, and thank you, students. And students, one announcement is there that next session would be on audit report, and that would be on 15th July, 15 July, Wednesday. So next session would be on 15 July, Wednesday. Thank you, students. As I have been requesting you to circulate among your groups that audit sessions, audit insight sessions are going on. So just circulate among your groups so that everybody can take benefit of this. Thank you, students. Thank you, sir. Yes.